Hello friends, a very warm welcome to my channel. In this video, we are going to analyze a stock which belongs to one of the fastest growing trends in the world, which is music streaming. We are going to talk about Tips Industries. If you're new to the channel, please do subscribe and hit the bell icon so that you get all the notifications of my new videos. And don't forget to join our Telegram channel where we discuss daily market analysis, news, views and lots of interesting stuff. So Tips Industries has two businesses. One is the music business and the second one is the movie business. And very soon the company is going to demerge these two businesses. So this company was established in 1988. It's a family-run business by the Taurani family. They are into production and distribution of movies as well as they are into creation, purchase and licensing of various music content. During 1990s, Tips was the top performing company of this sector. They had the highest number of the gold and platinum discs which existed. So this rating is given based on the number of records which you sell of a particular cassette. They have a collection of more than 29,000 songs in their library and they have more than 64 million YouTube subscribers in various channels. They have made more than 40 Hindi films over the last 20 years and they are one of the leaders in producing Punjabi films. In the field of acquiring music IPs and successfully licensing them, this company has done very good work in the last 30 to 40 years. Now let's talk about the management of the company. This company had very humble beginnings and this business was, business in this sector was started by the father of Mr. Kumar Taurani and Mr. Ramesh Taurani. Later these two brothers started this company which is the Tips Industries. And presently Mr. Kumar Taurani is the chairman and managing director and the joint managing director is Mr. Ramesh Taurani. So both of these have more than 40 years of experience in this industry. They are very well versed of what's happening, how to excel in this industry, how to choose the right songs, how to identify great artists and how to produce great films. So they have a very diversified experience and they have seen ups and downs in the industry. So they are very successfully running this company in the last few years. Now let's talk about the journey of this company. They directly did not start with music licensing. They started by selling electronics in a very small electronics shop started by their father. Later they started selling music cassettes. In 1980 they started selling music cassettes. In 1985 they started a firm called RK Electronics. In that they started recording the music because they found music recording had higher profits than just selling music cassettes or records. So they used to identify new and promising singers. In fact, the name itself, the Tips, suggests to identify promising singers. So they used to identify young talent, they used to record their songs and sell them as cassettes during those times. In 1988, they started Tips Cassettes and Records Company and they started acquiring the music rights of other music producers. In 1990, they started their first manufacturing facility of records and cassettes. In 1992 and 1993, they merged that RK firm with the Tips Private Limited Company. In 1993, they started producing films. In 1997, they started their second manufacturing facility. In 1999, they acquired a couple of companies which is Video Master Time Magnetic India Limited and Western Components Limited. In 2000, they came out with a IPO. During the period from 2000 to 2020, this industry suffered a lot due to piracy, due to change in the way people listen to music. People reduced buying the physical records, the music cassettes, and they shifted to online. They started listening to digital content. And piracy increased a lot, due to which this industry suffered for somewhere around 15 years during the period between 2000 to 2020. So that was a phase wherein these people had a very difficult time to survive in this business. In 2010, they inked a licensing deal with a Singapore company called Soundbus. In 2020, recently they did a buyback of about 13.5 lakh shares of their company. And in 2021 onwards, they have done several partnerships, one of which is with YouTube. And recently they also announced a deal with Facebook. So like this, with different music platforms or with different social media platforms, they keep doing partnerships for licensing their music content. So let's understand the type of content and how we consume it. Generally, starting with the news we listen only once, whereas a TV serial you see a little more, maybe a couple of times than the news which you only listen to once. Then the web series and the movies, you have a interest of watching them maybe a few times if it's good and if you like it. Whereas music has that repeatability feature where you listen it for hundreds and hundreds of times for years and years to come. So that is something which is very peculiar and interesting for music type of content which has high repeatability. So this helps the seller of the music monetize the music several times, which generates a lot of value for music. So compared to the other types of content like news, TV serials, web series and films, music has a lot of repeatability feature, as well as it has more value. That's why it is at the top of the pyramid in this diagram. And within the music industry, now globally these changes are happening. It has become an internet based business. 68% of the business in the music industry is generated online. As on September 2019, 7 out of the top 10 most followed accounts on Twitter belong to musicians. This shows that the level of interest of people in listening to music and following the influencers related to the music industry. On YouTube also, there were musicians which owned the majority of the videos, which had more than 1 billion views and which made it to the top 10 most watched videos of the all time. So in YouTube also, the top performing channels and the top performing views are from the music videos itself. The Indian digital ad industry is growing at a CAGR of roughly 27%, the industry itself, and it is estimated to cross about 23,673 crores by 2022, end of 2022. The ad spend by different industries can be understood from this diagram. You can see that the amount of investments in the display banner, which is in the light blue color, is getting reduced to somewhere around 14, 15 or even 10% for some industries, whereas the spend on other online ways of marketing like social media, which is in a dark blue, online video, which is in yellow, is going on increasing across the industries. So this shows the potential of this industry presently as well as going further, as companies in all the sectors will try to spend more and more in digital forms of advertising, which is good for companies like Tips. Among the people who are coming online and using social media, 9 out of 10 people are somewhere or the other, directly or indirectly, connected to the usage of music. So digital media as such is expected to grow at a CAGR of 27% for the next few years to cross the industry size of 50,000 crore by FY25. The Indian music industry will grow at a CAGR of 15% to cross rupees $23 billion size by 2020. The music labels owned by companies like Tips have an IP protection of up to 60 years, so they can monetize this up to 60 years, which is a very long period of time. In 2020, compared to 2019, people have spent an average 21.5 hours listening to music compared to 19.5 hours in 2019. So the time spent by listening to music online is increasing every year. The younger people in the age group of 16 to 44 are major target of companies like Tips to monetize their content, as they are willing to pay money to listen music. They are willing to pay money to listen to for an ads-free experience. So due to the new age technologies what we are using, there is no need to carry an iPod or any other device. Now your smartphone itself has become all-in-one device which will help you listen to music or watch any video content, play games, or even use for phone calls. The data consumption is rising. The mobile data traffic is expected to grow at 21% CAGR from 2019 to 25. Number of subscribers on the internet are rising. Presently the mobile internet subscribers are about 72 crore, and this is expected to touch to about 134 crores by 2025. So themes like this or trends like this are generating more and more tailwinds for the music streaming industry. In the rural areas, still the density is only 57%, so there is a lot of untapped market still in the rural areas. The speed at which we use internet is increasing. The number of 4G connections are increasing, and now we are moving to even 5G. The number of people who are creating content and the amount of content is becoming huge day by day. Data is becoming cheaper, so the amount of data which people use is becoming higher and higher as it is becoming cheaper day by day. Recently, there has been a trend of creating short videos like reels on Instagram or shorts on YouTube. So having these kind of short videos also increases the number of usage or consumption of different forms of music. Now let's understand the business model of the company. The first participants in this value chain are the music creators. Now who are the music creators? There are people who create the music. They are people like singers or writers which fall under the category of music creators. Then we come to the film producers who produce the films, who buy the songs from the music creators. Now the film producers sell these songs, the rights to use these songs, to the music labels like Tips, Saregama or T-Series. So now these people become the owners of those songs, and these people start licensing these songs to various platforms like social media or different music streaming devices. So this is how the business or the industry is structured. In terms of value model, if you see, the music creators get the payment from the film producers for the content which they create. The music label pays the film producer and purchases the song. Either it's a lump sum payment or it is lump sum plus royalty based on the number of times the music is used. Then the music labels licenses the song or the music content to the different streaming platforms which pay the music label again either on lump sum or a combination of lump sum plus pay per use royalty kind of a model. Now content wise, there could be two ways in which the content can be created. Either the content can be created by the music label itself, like Tips has their own team to produce films, to create songs, and Tips can also acquire songs from other movie producers or singers or different album creators. So these are two ways in which a content can be generated in this industry. Who are the different customers of Tips? Tips has customers which fall into different categories, which could be different OTT platforms which we use daily like Netflix or Amazon Prime. There could be content aggregators, TV channels, there could be telecom companies, radio stations, advertisers, event management companies. So whenever you're even organizing an offline event, if you're playing songs, you have to take a license from Tips or Saregama and only then you're allowed to play songs. So these are the different customers through which Tips can monetize their content. Here are some examples of digital platforms where Tips has already partnered with and they generate regular revenue like Facebook, Instagram, YouTube, iTunes, Spotify. Then they have various deals with companies like Netflix, Therma Production, Viacom, Tata Sky. They have partnership with channels like Zee, Sony, Star, Viacom. So like this, there are several stakeholders which the company has long-standing relationships and they monetize their content through different ways. As per geography, if you see, they generate about 57% of the revenue from exports and about 43% from the domestic sales. Segment wise, they do not produce films every year. So in the recent year, they have not produced any films. So the entire revenue has been generated from the music streaming itself. Inside the music segment of their business, if you observe, 85% of the revenue is coming from streaming. So now online streaming contributes almost the entire revenue for this company, and the selling of physical cassettes and other forms has almost become negligible. For the competitors of the companies like Saregama, T-Series, Zee Music, Sony Music, Zee Music and Sony Music are smaller compared to the others in this industry. Now let's understand a comparison between Tips and Saregama in a broad way. How are these two companies different from each other? In terms of the number of songs, if you see, Saregama is much bigger than Tips, which has more than 1,30,000 songs compared to around 30,000 songs only with Tips. Tips both produces the songs as well as they license the songs or they buy the content from other song creators, whereas Saregama's main focus is only on purchase and they don't generally create songs. This is in one way an advantage or a disadvantage, the way you look at it. When you're creating your own song, when Tips is creating their own songs, they generally try to identify new promising young talent. They give them an opportunity to create content and they invest in that particular artist. If that particular song clicks or it becomes viral or people like it a lot, then Tips makes a lot of money from a very small investment. So that is like investment in a startup company the way we do, or in a small cap company the way we do. It involves higher risk, but the returns are also much higher. So that is not much of an interest from a company point of view, which Saregama does. Saregama is also creating physical tangible products like electronic products like Caravan, whereas Tips doesn't do that. Now in this, what you can observe, when you are entering from a online business which is music streaming to a selling of physical products, the profit margin and the return on equity or return on capital employed in that business is much lower than the present business. This is normally not considered to be suggestible, as you are entering from a high margin, high ROC business to a low margin, low ROC business. Your capital allocation generally is expected to be either in the same category of business or a higher category of business. Now there's something called a content payback period. Whenever you buy something, from the date of purchase and the total amount of money which you have spent in buying that content or creating that content, in how much time frame you recover the entire cost. So normally Tips says that they generally recover their cost in about 2 to 2.5 years, whereas Saregama says they generally recover in about 5 years. So in this way, Tips is doing better than Saregama. Now there's a difference in the way both these companies account for their expenses. Whenever somebody is buying a content, either they have an option to either charge it to P&L entirely in the same year, or they can defer it for a couple of years or so. So Tips, what they do is the entire cost of their content, they write off to P&L in the same year. So this is a very prudent way of accounting. They don't carry it to the balance sheet and apportion over a period of years. So this is something I like, the conservative approach or a very prudent accounting approach which is done by TIPS. This brings complete clarity from an investor's point of view. Whereas in Saregama, what happens, they don't write off immediately in the first year to the P&L. So in this way, what it may appear sometimes whenever they have high content acquisition in that particular quarter, sometimes the profit percentage of TIPS may appear lesser compared to the earlier quarter, but in the subsequent quarters when they start monetizing their content, the profit percentage will be higher than normal in case of TIPS. Another difference is TIPS purchases the content in a lump sum basis. They don't generally continue paying royalty to the content creator for a long period of time. They pay the lump sum, take the content, and the content belongs to them. Whereas Saregama, what it does, it pays a lump sum as well as it has a royalty arrangement where depending on the number of times that song is played, Saregama earns money, and that a portion of that revenue is shared to the original content creator. So broadly, these are the difference in the style of working, style of accounting, and the business models of these two companies. Now let us compare both these companies on a few financial parameters. In terms of market cap, Saregama is much bigger company. It's almost 3 times than of TIPS. In terms of revenue also, it is much bigger than TIPS. If you see the EBITDA margins, they are much higher in case of TIPS, close to about 74%, and in Saregama it is in 30s. So why there is a difference in these two? As we have discussed earlier, Saregama is into a couple of other businesses by selling that caravan, which is a electronic item, as well as they are into publishing a magazine which is into losses. So these kind of capital allocations have led to lower profit margins when compared to TIPS. Similarly, you compare the ROCE also, it is much lesser than TIPS Industries. The 5-year sales growth of both the companies, if you see, it is about 6 to 15%. But this is not a correct picture, as the turnaround in this industry has happened in the last 2 years itself. And the TIPS Industries is giving a guidance of about 20 to 25% growth in the top line for the next 3 to 5 years consistently. In terms of price to earning ratio, TIPS is trading somewhere around 40, whereas Saregama is trading somewhere around 65. And in terms of market cap to sales, it's trading somewhere around 15, whereas Saregama is trading somewhere around 18. So in terms of valuation, TIPS appears to be cheaper than Saregama. Now let's understand the competitive strengths of this company or economic moat. This particular industry works on a copyright kind of a framework, wherein for a new company to enter this business is not easy. Neither without the permission of the existing players, they can use their content. So it's a high entry barrier business, as even if somebody starts to do this business today, for them to acquire the rights of so many songs, it's like 30, 40, 50,000 songs, it's going to take decades together. So it's a very high entry barrier business. Then whenever you acquire something, you have to be very careful that the amount which you are investing in that content should be recovered as fast as possible, and that song should be most popular. So it's not something which anybody can do. It requires a kind of expertise which the TIPS Industries management has to identify the best artist and to identify the best type of content which can perform and monetize well. They have an existing library of more than 29 to 30,000 songs, which is again their competitive edge. They have been consistently successful in acquiring and monetizing the IPR rights over the several years. They have been generating constant cash flows. Their business model is an asset-light model wherein they don't require any investment in any kind of a plant and machinery or anything. They just have to buy content and they have to keep on monetizing it. So the profit margins are almost like 70s and 80%, which is very high. They have existing partnerships with almost all the OTT platforms and various social media channels, which gives them an edge over any other competitor who is a newcomer. And their content recovery time is 2.5 years, which is much lesser even than their competitors, which is Saregama. They have a good ability to create their own original content, which becomes highly popular, so that they can monetize much larger than the content which they procure. They have a very good brand value, as right from childhood we know the brand TIPS, and they have long-standing strong relationships of over 30 to 40 years with all the stakeholders in this industry. So having all these kinds of economic moats makes this company a very strong business franchise to invest in. In terms of content, as we have discussed, the company writes off the entire 100% content purchase cost to the P&L, and they have a general policy wherein they don't take debt. They generally plan to acquire the new content based on the funds generated through their internal accruals. They have an in-house team to create content as well as identify great artists and identify good quality content which can monetize very well. Now let's talk about few points which the management highlighted in their latest Q3 FY22 earnings calls. In this quarter, they released about 86 songs, which is the highest in any quarter till now. And in this year, in the last 9 months, they have released about 203 songs, which is a very good number. In this year, they have not released any films, and the management says that they are seeing very strong traction across all the platforms on which they are licensing their music. They have also discussed about some growth guidances, like they expect the top line to grow at about 20 to 25% for the next 3 to 5 years, and bottom line around 15 to 20% in the next 3 to 5 years. So both these numbers are pretty good. They are even open if they find any inorganic opportunity. So there was a period between 2001 to 2020. During that period, they did not buy many songs. So if there's some other smaller company which has some licenses already, they are open to buying those kind of companies to increase the number of songs in their library. The company plans to be more aggressive in their content acquisition in terms of the amount they spend on the content acquisition. And as the music streaming still it's in the early nascent stage in India, there is a lot of tailwinds in this sector. The piracy has already reduced, and whatever it exists a bit, that is also going to be reduced very strictly by the government, the other platforms which we use. So this will generate more revenue for companies like this, and demerger, we'll discuss in more detail in the coming slide, will create more value unlocking in tips industries. And there's a new technology or a new asset class emerging these days, which are called the NFTs, which are the non-fungible tokens. So they can use their content to also create NFTs or any other technology which comes in future and monetize it in the new forms also. Now overall, what exactly is happening and what will lead to exponential growth in this industry is their existing content which they can continuously monetize across the present platforms, as well as the new partnerships. What they do, the existing content monetization goes on increasing. On top of it, they continuously keep adding new content, so that monetization keeps on increasing. And with this full content, the ways in which they monetize their content and the different number of platforms on which they monetize their content will also increase. So the content is increasing as well as the number of platforms are increasing. This will lead to exponential growth for this kind of companies. In terms of number of songs, if you see in FY20, they added about 100 songs, in FY21 215 songs, and in 9 months itself they have added more than 200 songs in this particular year. In terms of number of views on YouTube, they are steadily rising. YouTube contributes a lot of revenue for companies like this. In Q3 FY21 compared to Q3 FY22, in the last 1 year, this quarter, the views have increased by more than 53%. And in the last 3 years, they have grown at a CAGR of 41%. So you can see the amount of views on YouTube are drastically increasing for this company. Now, how will the demerger unlock value? The films division as well as the music division will be demerged into two different companies. The music division is the business which generates higher margins and higher ROCE. So people will be more inclined towards staying invested in this music business, and this will further unlock value for the music business. The management will focus on both the businesses individually. They will try to get more business opportunities in both the businesses individually. This will enhance the efficiencies of both these businesses. For shareholders, this will unlock value for both the businesses individually. Now, what are the risks which this company might face? Copyright infringement, piracy. This is an ongoing risk which these companies have to identify. They have to keep countering as a part of their business itself. Content acquisition or movie production is something which is not very easy. You have to identify and buy or create the right content. Otherwise, the amount which you invest in this content will go waste and you will incur a loss. There is a risk of competition with bigger players like Saregama and T-Series. These companies are dependent on other artists and other film producers to purchase content. So if that particular industry goes in a slowdown, then this will also get directly impacted, as there will not be new content created for them to purchase. So these are some risks specifically to this kind of industries. Now, after understanding the business and various industry aspects, let's come to the numbers. Starting with the Q3 FY22 results, the revenue went up from 31 crores to 44 crores. EBITDA went up from 19 to 26 crores, and profit after tax from 12 crores to 20 crores. Margins have remained stable at about 58 to 59%. in EBITDA, and profit after tax margins have improved from 38 to 45%. In this quarter, they have released highest ever songs of 86 number. In the last 5 years revenue, if you compare, we are also taking the TTM figures as we have already finished 3 quarters. Wherever you see a bigger bar in that particular year, you can understand, like in FY19, that they had released a film. So whenever there's a revenue from film production, then that particular year the revenue is higher. So in FY19 they did about 203 crores, but out of which only 67 crores is from the music business. So it will be ideal to compare 47, 67, 91 and now 196. But mind you that in trailing 12 months 196 is purely from their music business. So the music business is drastically improving. EBITDA has improved from about 10 crores in FY18 to 146 crores in the trailing 12 months. EBITDA margins have improved drastically to about 74%. The profit after tax has gone up to about 74 crores in the trailing 12 months, and profit after tax margins have improved at somewhere around 37 to 47%. So the revenue is steadily rising. The margins are improving for Tips Industries. Now coming to the balance sheet items, the reserves have steadily rising. They have about 121 crores on the balance sheet as on September 21. Equity has gone down to 13 crores because they did a buyback of their shares. Borrowings have gone away. They have become a debt-free company now. Trade payables are under control. They don't have any abnormal amounts to be paid to any of their content creators. It's an asset-light model, so the fixed assets are just negligible. There's no inventory, as they don't take the content to the balance sheet. They write it off to the P&L. Trade receivables are normal. They don't give a very long time to their licensees to pay their money. So they have about debtor days of about 2 months on an average from all kinds of platforms which are using their service. ROC has gone up to about 65% in FY21. The cash and cash equivalents are steadily rising. Their debt has become zero, as well as the cash balance has gone up to about 58 crores in September 21. The operating cash flow has been positive throughout. They have generated about 41 crores in FY21. Free cash flows has also been positive. They have done about 40 crores of free cash flow in FY21. ROE is somewhere around 48%, dividend yield about 0.09%. So it's a dividend paying company, but the management may think of paying more dividend as they have enough cash, and it's an asset light model. The remuneration to the managing directors is about 3.96 crores, and the auditors are SSPA and associates. In terms of payments to related parties, there are no material transactions posing any significant risk to the company. Now let's understand the shareholding pattern. The promoters hold up about 75% of the company, which is a very good sign. The public holds about 24%. FIIs and DIIs have not shown much interest still in the company. This can be taken even as an opportunity, as when they start entering the stock price may further go up. Now let's talk about the valuations part. The last trade price is somewhere around 2,250. 2-week high is about 2,629 and 447. In the last 1 year, the stock has given a massive return of about 350%. Last year's average CAGR is about 229%, and last 5 years average CAGR is close to 100%. So the stock has gone up almost 25 to 50x in the last 2 to 3 years and created massive wealth to the shareholders. So this kind of thing happens only when you pick a trend right at the inflection point. Then you make huge amount of money in your investing journey. The median PE in the last 5 years is somewhere around 31, and market cap is around 2,900 crores. Face value is still 10, which is again good. EPS is somewhere around 57 rupees, and PE ratio comes to about 40. So in terms of valuation and PE ratio, it's a kind of an expensive valuation presently. Book value is somewhere around 100, which makes PB ratio close to about 22 times, which is very expensive. Market cap to sales is 15 times, which is again on the higher side. So in terms of valuation and the current levels, it seems to be a slightly overpriced stock. Now let's see the chart. If someone likes the company and if he wants to start accumulating the stock, he can begin at the level of somewhere around 1500, where the stock has decent support. So this is about Tips Industries. I hope you like the business analysis and the industry analysis what we did, and the way we have read their financials, the way we have compared with Saregama, and I'm sure you will be able to take the right decision of investing in the company. So overall, to summarize, it's a very good management. They started with humble beginnings and they have experience of close to 4 decades in this business. The business model is very good. It's scalable business model. It's an asset-light business model where you don't need much of investment and you can keep monetizing the existing content for decades and decades together. The sector is witnessing huge tailwinds, and the industry itself will grow at more than 20% in the coming years. So the company has a lot of potential for growth. And the growth has just begun in the last couple of years itself. There's kind of an inflection point in India where people are consuming more of digital content due to various factors which we have discussed. In terms of fundamentals, the company has very decent fundamentals, and demerger will further give you an opportunity to choose which business you want to invest in. In terms of performance, we have to closely watch that the performance has to be consistent. If there is an inconsistency in the performance going further, whatever valuations the market is giving presently, it will get wiped off in a flash. The company or the industry has dependency on the artists as well as the film industry for purchasing their content. So if that industry doesn't do well, it will have a direct impact on this company. Technology disruption has come to an advantage once to this company as a disadvantage once. When it came at a disadvantage during that couple of decades from 2000 to 2020, and now it is an advantage. If some kind of a different disruption comes in future and the company is not able to fit their business model in that particular technology change, the company may get affected. In terms of valuation, the stocks look overpriced at the present valuation, and you should wait for a decent entry point in case you choose to invest in the company. So this is about Tips Industries. I hope you like the video. If you like it, hit the like button and subscribe to the channel. Don't forget to join our Telegram channel. Thank you for watching and have a wonderful day.